All right, everybody. As you know, we only have taken sponsors for the podcast of products that we actually use. All right. Tax Help Software and ENQ. Okay. ENQ is what allows us to call the government and get into the IRS in under 3 minutes. Tax Help Software is what we use to pull transcripts. It's our intelligent ordering where we track what's going on with our clients overnight. So in the morning, we know if anything has happened on the IRS side. And also what we use for our resolution forms, our offers, installment agreements, uncollectible, powers of attorney, all of that. Okay. So if you want to go check them out, I will put the links below. If you were to show up at Green and Sklar's and wander around and follow me for a day, that's what we use. We use ENQ to call the government. We use Tax Help Software for basically everything else. Okay, so check them out. They help make this podcast work. And thanks for listening. All right, everybody. Thanks for joining me for this week's Tax Rep Network podcast. I am very excited. It took a long time for us to get our schedules together, but joining me is the Nina Olson, who you probably know is our former, the first actually, and actually not the first taxpayer advocate. You were technically the second taxpayer advocate, but the great taxpayer advocate for the IRS, who is now retired and is now the director of the Center for Taxpayer Rights. From March 2001 to July 2019, Nina served as the National Taxpayer Advocate of the United States, an independent organization within the Internal Revenue Service dedicated to assisting taxpayers resolve their problems with the IRS and making administrative and legislative recommendations to mitigate these problems systematically. She has submitted 39 annual reports to Congress and testified before congressional committees over 60 times. Before serving as the National Taxpayer Advocate, Nina founded and directed the Community Tax Law Project, the first independent low-income taxpayer clinic in the U.S. She also maintained a private legal practice representing taxpayers in disputes with the IRS. Nina's received many awards and recognitions, including the American Bar Association Section of Taxation's Distinguished Service Award for Lifetime Service, Pro Bono Award, and the Jules Ritholtz Memorial Merit Award for Outstanding Dedication, Achievement, and Integrity in the field of civil and criminal tax controversies.
Right. Let's stop the introduction.
Okay, I'm going to, but I will tell you, I quote Jules Ritholtz, who I never knew, all the time. He was before my time, and I quote him all the time because he had a great quote in the area of criminal tax, which was, for the accountants, always make sure if someone needs to go to jail, it's the client, not you. And so I use it in every one of my criminal tax programs. So anyway, Nina, thanks for doing this.
Great, and I'm so glad we were able to finally find a time to do it.
I know we're both crazy, but so you and I discussed this topic. I mean, the things we're going to hit on is vinatieri versus commissioner, which, if you're listening and you don't know what that is a case you want to be familiar with. All right, and also refund bypass. All right, and how we do that, and so. They're tremendous topics. And honestly, I think they're topics that are going to come up a lot because of the fallout of coronavirus. I think that these two topics are going to be critical for practitioners. And so just as background for those folks, again, I'm going to assume you're not familiar with the vinatieri decision. And I don't want to go through the entire case, so I'm going to summarize as quickly as I can. Miss Vinatieri, who was a abused, I believe, mother of one, who fled the marriage, ended up, as many low-income taxpayers are who struggle, ended up being fairly nomadic and moving from apartment to wherever she could. Ultimately ends up in collection with balances due. And there's a threat to levy that is issued. She goes pro se, takes her own collection due process hearing. At the collection due process hearing, the settlement officer who reviewed her 433 agreed that she clearly was uncollectible. However, she had two missing tax returns. I want to say 05 and 07, but I'm going by memory. There were two missing tax returns, and because she wasn't in compliance, the levy action could go forward. She then files her own pro se case in the United States Tax Court. And the United States Tax Court concluded that whether she's in compliance or not, the IRS doesn't have to give her an installment agreement. They don't have to consider an offer. But under 6343, the federal statute, they cannot levy somebody who is in economic hardship. And economic hardship is described as being uncollectible, where the taxpayer is unable to pay their allowable expenses from their income. And so the conclusion is, IRS, you can scream, yell, bang your head, do whatever you want. You cannot levy them. And so that was I remember when it came out, I wrote articles and columns about it. Nina, so it sounds like, where were you on 9/11? Where were you when you first learned about the Vinatieri case?
Well, it was really interesting because obviously it came out in 2009 on December 21st, 2009. And I was the National Taxpayer Advocate still. And of course, anytime in December, you're in the throes of finishing up the annual report to Congress and life is just crazy. But I remember an attorney advisor coming to me because the judge in the tax court, Judge Dawson, who wrote the opinion, had called her and said, he knew her, she had clerked at the court, and called her and said, you need to make sure Ms. Olson sees this case. And so I thought, well, okay. So I looked at the case and just went, holy cow. Yep. The case was so clear, but reading the case, you can understand how appalled the judge was by the IRS's conduct. When you read the case, you've got Mrs. Vinatieri, laying out her life circumstances. And he quoted a whole page and a quarter of her response, in the petition saying, don't levy on me. And he just put it in the legal opinion because it was very clear to him that it was such an abuse of discretion by the IRS to approve her going forward with the levy. And what was so interesting to me in reading that case was, in the history of the case, again, we can talk about this case because the judge took the time to put every gory detail in about the procedural posture of this case. Not only did the settlement officer say, yes, you have economic hardship, but because you haven't filed, we're going to move forward with the levy action, right. Allow the IRS to move forward with it. But that was reviewed by the settlement officer's management in appeals. And then the case gets to chief counsel. And instead of going, we're not going to touch this case with a 10-foot pole and getting it over to appeals to do the right thing, they filed a motion for summary judgment saying, oh, the law's on our side. And so you had all these points in the process where people could have looked at the fact that this woman had pulmonary fibrosis, wrote that she was dying, had a car that was from 1996 and had 243,000 miles on it, and had a $300 value, that she had $800 in income and $800 in expenses, of which $600 was rent. Yep. That she said she couldn't go to a low-income taxpayer clinic 30 miles away because her car wouldn't make it that far. They had this opportunity and they didn't do anything about it. And that all built to the judge writing this extraordinary opinion that basically said, that denied the IRS summary judgment, saying you were wrong as a matter of law and it was an abuse of discretion. And, basically said that the law says that where there is economic hardship, which the government had already ceded, she had economic hardship. Yep. If you proceed with the levy, that you will have to release anyway, then doing that is an abuse of discretion. And I just found that such a strong opinion. Now, when we got the opinion, I got my staff to look at the IRMs and the chief counsel, and working with chief counsel and the staff and the task staff, the attorney advisors, we identified all of these IRMs on the ACS side, on the accounts management side, all over the place, that said, if the taxpayer hasn't filed a return, levy, even if they have economic hardship. And it took us something like a year and a half to get all those IRMs changed. And I have to say chief counsel really worked closely with us on that. But it just seemed like it was so embedded in the IRS mentality of the folks on collection that it was like whack-a-mole. It didn't matter that you had the IRS change. And so there got to a point where we had to issue guidance to my employees, an interim guidance memorandum to my employees, basically citing vinatieri and telling them that if the IRS came back to them saying they were going to proceed with an audit, they weren't going to release the levy because the taxpayer hadn't filed the returns, then send a TAO over, a taxpayer assistance order over, and attach the full opinion of vinatieri with it.
Yep.
And it was just, and now it's still happening. It's still happening.
Oh, not only, so I had a conversation this morning with one of the executives, and we are getting this all over the place. My law partner, Lisa Perkins, who runs the low income clinic at UConn, a number of my tax rep members have reached out to me, and no, it's sort of a training failure. It is, my first thought when it came out was, prior to 98, the attitude at the IRS was they could do whatever they want, right? I mean, they could take your house, they could, whatever you want. You were literally at their mercy. 98 happens, but those people don't go away. They're still there. All right. And I think my first sense was that this continues to be carryover of sort of that poisonous attitude of, people that owe money are clearly criminals. They're all bad, and we have to go drop the hammer on them. The problem is we're having it now, and I'm not sure if it's a training issue. I don't know if that sort of everyone is a criminal attitude is because, the government is clearly, we've done it here on the podcast. I've had Damon Rowe, I've had Carolyn Schenk, Darren Gio, where clearly they're looking at fraud and everyone's searching for fraud. But you're not seeing the same sort of an attitude of, okay, you're only making how much? Here's what you do. Go to a low-income clinic, and the RO's backing off or ACS. None of that. It seems to be full steam ahead. Punish them as much as you can. Get whatever you can.
Well, this is where, vinatieri led to, the recommendation that we made in the annual report, and I've written blogs about since I've been out, where this is where you can use the data that we have to identify taxpayers who are at risk of economic hardship, and then put a flag on the account. So if that case gets assigned to a revenue officer, or it gets assigned to ACS, or the taxpayer calls in, that triggers that a Q&A, because the IRS is a hierarchical organization that is afraid to give its employees discretion. So fine, let's build a process in so that you use data to recognize that this taxpayer, you can take their income from their last filed return, their income and their family size is using your allowable living expenses, your own formula, your own conservative formula. You identify this taxpayer at risk of economic hardship. Under the statute, the definition in the regs, what economic hardship means, using your own procedures. And then if that taxpayer gets assigned somewhere for collection or calls in, that triggers, when they call and you type in that social, that triggers a screen that says, okay, you can't just automatically go do things. You can't automatically go and levy. One, you have to have a conversation with that taxpayer. Two, if they're on the phone, then start asking them about their financial information, because they may be able to be put into currently not collectible, and that means they're at economic hardship, and therefore you should not levy on them. But it prompts, you use the system to prompt, asking those questions, because apparently they're not doing it on their own. On their own, what they want to do is say, can you full pay? If you can't full pay, can you pay divide by 72? And people agree to divide by 72 just to get the IRS off their back. And then of course they default.
You're right.
And our research in TAS had shown that something like 43% of the streamlined installment agreements, from ACS divide by 72, were from taxpayers whose incomes were below their allowable living expenses, basically that they were in economic hardship and the IRS should put them in currently not collectible.
Right.
and talk to them about offers and compromise.
Right.
They're below offer, if they have economic hardship, now's the time to file the offer,
Well,
to get rid of that debt for good. But
and
where are
also,
those conversations?
well, if you're an RO and you have a return that shows or you get a P&L for the current year and you show an income that just out of the gate appears to meet especially the low income standards, right? If you have a family of 4 and they're making less than, I don't remember the number is 48,000, whatever it is, just to say, look, we're going to stop here. Here are the list of the Connecticut, or here are the low income clinics in your area. I believe you qualify. Have them contact me, get a 433, and just back off. You know why? We're better off with them getting rid of those people and focusing on the actual criminals, the high income non-filers, the fraudsters. I mean, who there aren't that many of. We probably have enough ROs to go after them. But when you fill in everyone else and they're dropping the hammer on everybody, it's a problem. I just laughed because you said, the government doesn't like giving its people discretion. When it comes to the notices of lien, if you ask them, they'll say, oh, the revenue officers have discretion. You talk to the revenue officer, I have no discretion. Right. And the reason is, if you're listening, they probably do have some discretion, but no one's going to use it in favor of a taxpayer.
Right.
Because, and Bob Percy and Richard Convisor, who were my former senior partners, Richard, both are retired, Bob passed away, told me something very interesting. They said, you have to understand the mind of a bureaucrat. The bureaucrat cares about their job. They are not inclined to risk it, to go out on a limb to try to help a taxpayer.
Well, this goes back to, and I do think that I was one of the luckiest human beings in the world to be able to serve as the National Taxpayer Advocate for as long as I did, because being inside the agency and being in the senior leadership team for as long as I was, seeing the way the IRS operates from that perspective, and also having the ground perspective, still continuing to be in cases and seeing the downstream consequences on a daily basis of how the IRS operated at that senior level. The first thing is that the IRS defines itself as an enforcement agency. It does not define itself as a tax administration agency. And I think there is a world of difference. And when you say you are an enforcement agency, then your measures start reflecting that starting point. And you can see it in how the IRS publicizes its measures. Every year it reports on, what it's done for the fiscal year, collection results, audit results. One year there were something like 6 pages in that report of enforcement-oriented results. And there was 1 page of taxpayer service results, which were mainly, how many pieces of correspondence were processed, level of service on the phones, et cetera. And it just shows you how the agency thinks. And it also shows you how the agency is measuring itself. So for the frontline revenue officer, who, yes, in the IRM, has the authority to not file a lien, is not going to get a reward. And they're very careful about saying not holding revenue, ROTRs, records of tax enforcement results. They learned that from RA 98. You can't measure individual employees on how many dollars they collect, but they look at the unit. The unit is given a workload. They look at what the expectations are, and that little silent language. And then you look at the 5 pages of enforcement results. They're not reporting how many liens they didn't file because the taxpayer had no assets. They're reporting how many liens they did file. And that's the yay, look at us. And so that goes through the entire culture. Instead of saying, how many taxpayers did we, not issue a levy on because they were experiencing economic hardship? And if you calculated that, that might lead to Congress saying, maybe we should mandate that you have this economic hardship indicator, maybe we should cut the statute of limitations for collection from 10 years to 6 years because we're not collecting anything in the last 4 years. Any number of things. It could lend to any number of, changes in the system that would better the system. But because of the culture and then the measures that flow from that culture and the training that flows from that culture, there's no reward to someone who wants to exercise their discretion in favor of the taxpayer.
Right. Right. No. No. It's and so for folks listening, to get back to vinatieri, normally, Nina, by the way, we did, Nina and I, along with Beverly Winstead and Karen Zahn, did this at the New England IRS Rep Conference. And I'm planning, Nina, on you and I doing something at this year's conference. I think we're going to be in person. I hope everyone will be vaccinated, and we'll put this behind us. And you and I also did this on a webinar talking about economic hardship. What I think it does is, normally the approach in my office and many other offices would be get people into compliance, and we move, because without compliance, you can't do anything. And then we move on to whatever the resolution is. But here, if you do that initial intake, and when you're, I'll sit, hear what years and how much is it, payroll, income, whatever. And then I work through a very rough 433 with them. What I've been training our people in our people in Green and Sklar's to do, and I've been urging the tax rep members to do, is look, if you do that and you immediately begin to think they look uncollectible, I almost suggest not necessarily a reverse, but while you're trying to get them to an EA or CPA to get into compliance, I want to get everything for the 433, because if we can show that they're uncollectible, I may try to get, contact the government, get that in, because at least we can get on the record that under 6343, we don't have to worry about levy action. Right. I can take time then, get them to a clinic or a VITA program to get missing returns done, or whatever, and we can deal with cleaning up the compliance issue. But I don't want to have the compliance issue hold up and possibly get them levied, because until the government knows, right, until they have a 433, although they could guess based on what they have on file, they don't necessarily know the person's uncollectible.
See, our data and our research studies from about, 2009 or 10 up until I walked out the door, and even this last year's annual report had an update on this, really showed that the IRS can do a pretty good job at identifying, based on the information it has, and it doesn't even have to have return information, based on the information it has, who is collectible and who is not collectible.
Listen,
I have to tell you that tax administrations around the world are doing that. And so where there is just this resistance. And I issue taxpayer advocate directives. We issue taxpayer assistance orders to get the IRS to use this economic hardship indicator. And just the enforcement mindset is, we might get somebody in that batch that could possibly collect. And I'm just like, this is an indicator. It's the beginning of a conversation. It's to ensure that you don't do some action that you will have to, by law, unwind. Right. And by the way, in the meantime, create great economic harm to this taxpayer. So all it is an indicator. You still have to make the determination of whether there's an economic hardship. It's flagging it for you, and it's prompting that you have that conversation. So the only thing that you can conclude if they don't have that conversation is they don't want to have that conversation, that they want to get this taxpayer done, put in a bucket, move on, and go to the next taxpayer, so they can get better numbers at the end that they can report.
Cases closed.
And that's the culture. And then someone who wants to have that conversation, there's somebody standing over them. Why are you taking the time on this case? And when we were in TAS, we would have, I'd go out and talk to my local offices, and they'd say, it's driving us crazy. We're getting all these cases from revenue officers. They've they've basically stopped the levy because the taxpayer did do economic hardship, but the levy's already gone on. And they're sending it over to us to do the return of levy proceeds because they were levying on someone who had economic hardship. And it's like TAS was just sending the OR back to them, the operations assistance request, because TAS didn't have the authority to return. The revenue officer had to. The revenue officer said, my boss won't let me do the work. I need you to send it to me so I can do the return of levy proceeds. Now, when the IRS comes to us and says, to the whole world and says, we need more revenue officers, and yet it's creating, we need more resources, and its whole system is creating rework, because when you have a TAS case, you have two IRS employees working that case, TAS and the function employee. Mm-hmm. And so when you see that going, and that's just like a tiny little thing that happens over and over and over again, instead of empowering that revenue officer himself or herself to do the return of levy proceeds, that's just crazy.
Right.
But that's the culture.
And the culture is it's actually making it more inefficient and creating more work.
Yes, absolutely. And more delay and more harm to the taxpayer because it's bouncing back and forth between TAS and the revenue officer, and the taxpayers not getting their dollars as quickly as they could.
Right.
Yeah,
no. And so Nina, kind of attached to this is, I want to move on to the idea of offset bypass refunds.
Yeah.
First of all, can you explain what that is?
Well, all right. So the concept of an offset is very, very old. It goes back to, United Kingdom, Magna Carta, whatever. Yep. But the concept behind it is that if you have, a creditor and a debtor, and on one hand, A and B, people, and B owes A, and then a debt comes up where A owes B, instead of having B pay A and then A pay B back, you do an offset. And, that then pays down the appropriate debts.
Right.
And so it's really a matter of common law that came up. And then in the Internal Revenue Code, 6402 provides that has several provisions, but there are two categories. One is an offset against a tax debt. And then the other is offsetting a tax, a tax refund is offset against an IRS tax debt, a federal tax debt. And then that's 6402A. And then there are 6402 C, D, E, that are what we call the Treasury Offset Program. And that is offsetting an IRS refund for a non-federal tax debt. And so that can include child support arrears. That can include state tax debts. It can include other federal tax debts. It can include unemployment insurance, where there's arrears on that. So in other federal debts, it could be arrears on Social Security, that you got too much Social Security disability and it's a debt that's out there. So, and there's a stacking order for how you would apply those refund offsets. Now, the difference between the two categories, the IRS tax refund offset, the IRS tax debt, and the Treasury offset program, is that the first, the IRS refund, is tax debt, is discretionary. And so we get back to that word, discretionary. It can be discretionary. It says the secretary may offset, whereas the Treasury offset program is the secretary shall offset. It doesn't have a choice. And it's not really administered by the IRS. It's the Bureau of Fiscal Service that gets these reports rolled up from the state child support enforcement agencies, that say this person has a debt. And then when the refund order goes through, to Bureau of Fiscal Service, it's offset by BFS. And so transcripts will not even show you, they will show you that it's an offset under the Treasury offset program, but it will not tell you what agency it was for. It will not tell you, it will tell you the amount. You can sort of see that, but it won't tell you the agency. So you have to call the Bureau of Fiscal Service to find out the agency, and they won't tell you the amount either. You have to go to track back to that agency to argue with them. And so that's the Treasury Offset Program.
But so at its simplest, I filed my 2020 return. I have a refund coming to me, but because I owe for prior years, the government takes my refund and applies it to the prior years.
Right, exactly. And there is an exception to that. And that's where you get to this offset bypass refund, where you are, because it's discretionary, that first category, you can bypass that offset and actually get a refund. And for some reason, TASC gets most of these cases, even though the authority is under the IRS Accounts Management 21, IRM 21. And at one point, while I was National Taxpayer Advocate, we were getting all of these cases where, there's a very narrow window where you can get in and you can get this refund, this offset bypass, where you have economic hardship. So again, that comes back to vinatieri and the regs under economic hardship. What is the definition of economic hardship? Your inability to pay your basic living expenses. And so you have to show economic hardship. And then that gets sent over to IRS and they will approve this bypass. And it actually becomes a manual refund, which has all sorts of issues there. But there's a tiny window in which you can do it, because the minute that that refund is actually offset, the only way to unwind it is if there has been a clerical error, basically. And a clerical error is something the IRS has done that is sort of inadvertent, like the IRS had the paperwork and it was proper paperwork and they didn't put it in time. But if they put it in time, if they processed it in time, the taxpayer would have had the offset bypassed.
So in essence, you have to do this before the money's taken.
Yes. Now, the IRMs for years said, and this is getting kind of technical, but it's kind of important. The IRM said before the 23C date. So what is 23C? Well, 23C is this form in the ancient time where the IRS was filling out literally a form of all the tax returns and taxes that had been assessed on a given day. And it would just be the summary of all of the taxes that were assessed on a given day. And that was posted. And that was when, there was like, okay, these taxes are assessed. Now what happens is, first of all, most of the time they're done, they're done by computer. But just because you've passed it's still called the 23C date where the tax is assessed. If the refund hasn't been scheduled by the IRS, you still have a window to request this refund offset. And the IRMs used to say, well, you have to do it by the 23C date. But as we all know, as things have gotten more automated and IRS is doing more fraud check and things like that, there can be a very great period of time. There can be refund holds, where the 23C date has passed, but the refund hasn't been scheduled because there's stuff going on in there. And so we had to get in TASC a legal opinion that said, it's not the 23C date that is the issue. It's the date of when the refund is actually scheduled. And if you come in with a bypass request after that scheduling, forget it. But if you come in anytime before the scheduling, you can get that request processed.
So how do you do this?
Well, you basically have to come in, and generally you can call accounts management. Good luck getting through on the phone.
Right.
Or you can, and they're the ones that have the authority, like TASC is going to have to go to accounts management to get them to do it. But most people go to TASC because it's an economic hardship, which qualifies under the criteria, and time is of the essence, which also qualifies, under the criteria. And it could be irreparable harm, which also qualifies under the criteria. That you get to TASC and you just say, I need to make sure that my refund isn't offset. And then you you give them your economic information. You give them the information, the same thing that you would do for any economic hardship thing, getting the levy released or whatever. I cannot afford to pay my bills, my income, and this is broader, like, I'm getting my lights turned off. In this COVID environment, it's huge.
Right.
And, and then what TAS has to do is send a form over that, it's reviewed by the local taxpayer advocate, and they have to sign off on it personally. And then it's sent over to accounts management, and that has to be approved. And there are all sorts of little boxes that have to be checked. That could be a possible clerical error. So if you've been working with TAS or the IRS and you think that refund, that bypass has gone through, if the bypass doesn't work, you want to get that paper, you want to talk to TAS and say, what happened there? Because it may be that a box wasn't checked that needed to be checked. And that's a clerical error on TAS's part. And that means the IRS can unwind that refund offset that was made and get the refund generated as a manual refund.
So let's say I meet with my CPA, and sure enough, I'm going to get a refund. Now, I owe money for back taxes. What I'm imagining is there a way to do this without having, in other words, is there a way to properly do this?
Yeah.
So in other words, let's say if I'm listening to this as an EA or CPA, I say to my client, look, I'll extend you. Do a 433. Let's get on the phone with ACS, because assuming they're not dealing with a revenue officer, and let's submit it so that you're uncollectible.
They won't submit it. It's going to be either you go to accounts management or you go to
TAS.
So and what I would do is I would call TAS and I would say, we're about to file. And what we need is to get you the information now so that you're ready, so that when this thing comes in, we'll open a case. We'll let you know when we're filing, when we've got the acknowledgement and the acceptance, and you go in and get this into the system.
What a waste of time of TAS. What a waste of TAS's time. It's
a waste of, and this goes to what people have been, this goes back to what can the IRS do automatically, so at least for some category of people, there will be people who will have economic hardship who clearly have income that would not meet certain criteria that you could exclude them. And so you need to save your resources for those people. I have a major medical bill that's coming up that the IRS will never know about, but I need this refund to pay for it. Or something like that. The IRS won't ever know that. They need to be told. But there are a bunch of people that you can see, and we should not be, you could automate this, at least for some of those people that are having economic hardship.
Even if you created a way to submit something to fiscal management, so they could flag it, even if they have to hold up and review.
Right.
At least it would get flagged before it was too late,
and not waste held up for review anyway,
and not waste the advocate's time.
Right. That you could actually have it be part of the filing process would also be something. The other thing is, for TAS, a vast majority of these cases were persons receiving the earned income credit, and people would call them frequent flyers, and people hated it because people would come in every year. Why don't you change your withholding to do this? And people were like, I use this for expenses, So again, one of the proposals is, why are you taking, first of all, 100% of the earned income credit of a person who by policy
qualifies for the earned income tax credit,
in the year that they're getting the refund?
They should just block that from being taken anyway.
Why don't you block it? Or at least, only take 15% of it. Why are you doing that? And that's something that we've recommended to Congress. But again, it's discretionary. So the IRS could say, as a matter of public policy, we're not taking that. Now, what's interesting is, and this brings us to, the economic stimulus impact payments, because, Congress said the first round, we're not going to have you offset the economic impact payments against back tax debts. They allowed it in 2008. And, that was really annoying to everybody. And so it was just like, no, we're not going to do it. They allowed child support offsets under the Treasury offset program, but didn't allow any other offsets under the Treasury. Okay, so that was the first round. Second round, and so IRS somehow programmed that when they issued those economic impact payments, they weren't going to offset them. So we know they can program that.
Right.
Then, and that was statutory, not discretionary. Second round, IRS even said, Congress said, you're not even going to offset it for child support. So they were able to program 0 offsets. So everybody started talking about the rebate recovery credit. Okay, well, because you're so far behind on processing things, or you processed a 2018, 19 or 18 return, and the person was actually eligible for more economic impact payment based on 2020, they're getting their 2 payments as a rebate recovery credit, and those were able to be offset, both under the Treasury offset program and the discretionary IRS offset. And so folks were saying, IRS, you have the discretion to not offset the rebate recovery credit. And the IRS came back and said, oh no, we can't do that. We don't know how to do it. That was one person's voice. We don't have the ability to program it this quickly. There were all sorts of excuses for not doing it. Well, then we started hearing from the clinics that their clients were actually getting, who had back tax debts, were actually getting the rebate recovery credit. Even though the IRS was saying to Congress, nope, we can't do this programming. Well, it turned out that they had forgotten to undo the programming that they had done for the January payments. And so the machine, when you looked at a transcript, it actually had 2 payments, your regular refund and on the transcript and the rebate recovery credit. And so the regular payment was being offset, but the rebate recovery credit was being issued. And it was like, okay, well, you can do this then. Right. Even though you've been saying, well, they woke up in the middle of the night and figured out that they hadn't reversed their programming. And so they went ahead and reversed their programming.
Of course.
And then everybody said, but wait a minute, you can do this. And so then they just came out and said, oh, we're good. We're going to be nice guys. We're not going to offset the rebate recovery credit. The whole moral of this story is they can do this. They can exercise their discretion. Now they're in trouble because they have exercised their discretion. And so now we're all going to be pushing very hard for them to exercise their discretion, going, they do not need statutory authority to not levy on EITC, So, and that would get rid of a ton of cases, which would leave you resources, right, to be able to work on those cases where the IRS doesn't have the information that there's economic hardship.
Well, here's the interesting thing, and I am in favor of them going after the fraudsters. I've been very vocal about that. I like Damon. I like Carolyn Schenk. I think they're wonderful people. I think they try very hard at their job. They can come up with the data for the high in earning non-filers based on zip codes. Listen, I'm in Connecticut. We have some really wealthy zip codes. All right. That I'm pretty sure if you got a non-filer based on their address, you can bet that they probably have some source of funds. But you can also do that in reverse. There are economically challenged areas where you can pretty much bet they probably cannot pay. Yep. And so you're right. It does, if they prove that they can do it one way, they can do it the other.
Well, this goes back to culture. This is where I'm like, the IRS talks a lot about using data, and we're doing data mining, we're doing this, we're doing data, and we're, in the 21st century. And I'm like, that's great. You're using it to identify compliance risks. Where are you using data and automation to assist taxpayers? And I'm not just talking about creating an online account. I'm talking about, like I say, the economic hardship indicator, what you're discussing, all of those things where you're using data to inform so you're not tormenting people and wasting resources. And that should be an equal focus, because just to point this out, 3%, or now it's 2% of the revenue that the IRS collects, only 2% is a direct result of enforcement action.
Right.
All of that 98% of that $3 trillion that the IRS collects is attributable to some mix of, yes, the indirect effect of IRS enforcement actions, but actually employers being willing to withhold and pay over, and taxpayers being willing to pay their taxes. And if you don't give them the customer service, if you don't answer the phone and process their returns and process their correspondence and minimize the burden on them when they do make an error, that 98% dollars can go down really quickly when trust and faith is eroded. And I just, I'm preaching to the choir here, but that is so key to, and that's why you have to define yourself as a tax administration as opposed to an enforcement agency.
No, I agree.
And the last thing I'll say with this, again, it goes to culture. I was talking many years ago to, and I've told this story before, to the chief strategist of the Swedish tax agency, which of course just blew me away that they had a chief strategist. His job was just to think. Right. And I had spent a week over there just studying the Swedish tax agency. And one of the things that he talked about, he was talking about trying to transform the culture of auditors there. And he drew a little picture. It was a stick figure of the auditor. And he said it was like a prehistoric cave person. And they were holding a spear. And he said, they viewed themselves as, harpoonists, or whatever.
Hunters.
It was hunters. And I said, well, are you trying to change them into gatherers? We got hunter gatherers, whatever. Yeah. But then he said, what we were trying to do was change them from looking at taxpayers as problem taxpayers into viewing them as taxpayers who have a problem. Yeah. And that just changes. It's just 180. It changes how you look at the issue. I'm going to help you solve this problem. I'm going to educate you. I'm going to, you're going to have to pay the taxes, but part of the problem solving is figuring out how you can afford to pay the taxes that I'm about to assess. But I'm also going to take the time to tell you why you did this wrong so that you don't repeat it again and that you understand it. I'm going to take the time to make sure that you do understand what I've just said. I'm going to send you notices that will explain things to you.
If you ever had a revenue officer say that to me, I'd fall over. But to get back to something you said, that they have a chief strategist and whose job is just to think. I think about a very famous quote. Henry Ford. It was written up when the Model T really got going. Six news reporters went to his office and to interview him, and he said he'll answer one question from each of them. And he wrote down the questions, then he called in his operating people who would answer each of the questions. And one of them, the reporters finally said, well, what do you do? And he said, my job is to think. And they said, that's it? And he said, it's the hardest job there is. That's why so few people do it. If one of the big stressors and I'm sure the listeners who people listening to this, getting a power of attorney process, getting papers opened that have been mailed in at the IRS because the notices are coming out, the client is freaking out, and there's stuff sitting in a pile. So I've been filing offers now with copies of the returns that are sitting in a pile or on a shelf now because they've been opened somewhere, saying we mailed it in July. Here's the green card. Don't know what you did with it. Here's a signed copy of it so you know it was done. Because I have people holding up offers and everything else, waiting for somebody somewhere to do something.
Right. That's just, the commissioner at one of his hearings said, because some of the senators, I guess it was Ways and Means, were really pressing on the phone service and things like that. And he said, and they were saying, we gave you money in COVID, for this, for more taxpayer service. And, he said that, yes, we're now going to be able to have 13,000 CSRs, customer service reps. But for us to do the work that we have, we need 20,000. And I thought, well, in all of the talking about enforcement in New York Times editorials and Larry Summers writing op-eds and things like that, where are we talking about the need for 20,000 customer service reps. And those customer service reps, by the way, are the people who open, the correspondence, and not just open it, but and they don't put it on a shelf. Right now, correspondence is being opened and put on a shelf, literally on a shelf. It's not, associated with a case. So you could have sent in all your response to a notice of deficiency, and it never gets associated with the case until after the notice of deficiency is issued.
Oh, yeah.
Same thing with your returns. Here, you're ready to do an offer and compromise. Those are the people also that process the CAF requests, So if you don't do those functions, you are abusing the taxpayers who are trying to comply, and you're also creating more work for yourself downstream for more expensive resources. And I don't hear people talking about that, I don't hear those requests from the IRS. I don't hear them saying that as loudly as they are saying they need more revenue officers and they need more revenue agents.
Right.
One of the members of Congress who was very unhappy with the service from the Taxpayer Advocate Service because they're swamped, said they need more people. Are you going to give them more money? Are you going to allow them to hire? And the commissioner did not answer that question. I was listening very closely.
Yes, I imagine. So before we go, tell us about the Center for Taxpayer Rights. What are you up to these days?
Well, there are a couple of things. We have established a low-income taxpayer clinic support center, and we are coordinating a litigation strategy call so that the clinics can start thinking as a national law firm in a way to, identify an issue that they want to bring litigation on and do it in a coordinated fashion, in much the same way that the IRS does on an issue, and share, knowledge, make sure that we're arguing them, consistently, depending on the facts, obviously. We're also filing, amicus briefs and cases. We've done a number of them. We have our own podcast, The Tax Chat. You can find it off of the Center for Taxpayer Rights, taxpayer-rights.org website. We're about to have our international conference on taxpayer rights, which was supposed to be held in Athens at the end of May, but it's going to be online. So it would be great for people to sign up. It's the subject is audits, actually, and we have a really great international lineup about what's going on in the world with audits. And then, we're working on we're working on a project that we've got a proposal out for, which goes to what we've been talking about, reimagining tax administration. And so we're really looking at how would you do tax administration in the United States if you really started from it not being an enforcement agency? And that will take some topics and really walk them through in minute detail as how we would propose it be done. So there's just a bunch of stuff that's going on. It's all consuming, which is why it was so hard for us to schedule this.
I know. But I'm going to put a link to the Center for Taxpayer Rights in the description so people can go and find you. I'm also going to put a link to the refund bypass, offset bypass, chief counsel memo, which you sent me. Thank you. I will put that there. I will try to actually put a link to vinatieri, the vinatieri decision as well. So if you're listening and want to go grab this stuff, it'll all be in the description for you. All right. And so, Nina, final question before I let you run away. What do you think the big takeaway should be for people listening to this today?
You really need to know economic hardship. And you really need to assume that the folks you're talking to in the IRS don't know about vinatieri and aren't going to be forthcoming about economic hardship. So it's going to be up to you to make the case.
Great advice. All right, Nina, listen, thank you for taking the time. And
thank you for having me. This is
great. No, listen, well, we'll start talking about the conference in a little while for November, but good luck with the May conference.
Yep.
I think it's going to be very cool. And like I said, if you're listening, I will put all the links in the description below so you can get a hold of Nina, check out the May conference, and look for the stuff that I'm about the offset bypass, the refund offset bypass. I'm going to butcher that.
Offset bypass
As
refund. I
offset
always have. I only can. I go
OBR.
backwards from the acronym OBR, and then I
OBR.
have to stop and go. Oh, offset B bypass
Yes.
R refund.
Right. And as well as the vinatieri decision. So, Nina, thank you. Enjoy the rest of your afternoon.
Thank you.
Wait a minute.